Hi, everyone, and welcome to today's webinar, Gold and Silver 101. I'm Machi Block, Senior Director at American Hartford Gold. We're the nation's largest precious metals dealer, and for over a decade, we've been helping countless numbers of Americans like you and I to sort through the noise in the market and protect their retirement savings with physical, tangible gold and silver. And today we're here to talk about gold, silver, the economy. And I'm sure that you, like me, and like all of us, have some honest concerns when you look at what's been going on with the US dollar, the mounting government debt, the war with Iran, and the very volatile and unpredictable stock market that we see right now. And you've seen gold and silver growing, maybe from a distance, or maybe you already own some, but you want to know more about where they're headed and whether now is really a good time to have them or to start investing them if it's your first time. So we're going to break all that down, the economic landscape, how you can invest into precious metals, why you should, and we'll help you get to know our company and why American Hartford Gold is the right choice for you. And so I want you just to take a minute, get settled. I want to let a few more people kind of come into the stream here. And while we wait, I'd love for you to write to me a comment. Let me know where you're watching from and whether you bought gold before or if this is your first time. And of course, whether or not you've joined us on a previous webinar. It's always nice to see who is a repeat viewer or who's here for the first time as well. And then let me know what brings you here today. Is there something that you're looking for specifically that you want to learn about with precious metals? Is there something in the economy that has you concerned that wants you to, invest into precious metals right now? So all of that kind of helps me understand how to tailor these webinars as we go forward. I really want to make sure that what I'm addressing is important to you. So go ahead and leave some comments and just get settled here while we let a few more people come in. We've got Dorothy from New York, Wendy from Wisconsin. Nice to have you both. Patricia from Maryland, Ralph from Memphis, Tennessee, Michael from Monroe, Connecticut, Daryl from Georgia. Hi, guys. Brian from Maryland, and Lawrence from Raleigh, Ross from Arkansas, Ron from Montana, and Rick from South Florida. Never bought any precious metals, first time. That's great. So Richard, you're going to learn a lot as we go forward here. Leslie from Goodyear, Arizona, and John from Chicago area. So got a good number of people here. That's fantastic. Continue to just leave your messages. I see a whole bunch more coming through. So thank you all for joining me. This should be a very informative webinar. And again, there's just a lot that's happening in the economy and the markets right now. And so we're going to cover all of that. And you'll walk away with really good knowledge on why gold and silver is a very stable part of a retirement savings plan or just an investment off the side, and how you can do that through American Hartford Gold. And so again, before we get into the heart of today's webinar, I'm Machi Block, Senior Director at American Hartford Gold. My job here is to help people like you and me to gain an understanding of and to invest into gold, silver, and precious metals. So today, of course, I'm excited to take you through the essentials of owning physical precious metals, why they're really such a crucial cornerstone of any well-built portfolio in this current economy, and that's no doubt why you're joining us today. Now, in our opinion, it's more important than ever before to understand how gold and silver can serve as your financial safety net. The entire economy is pushing that direction, and whether you're a seasoned investor or you're just beginning your journey, our goal today is to provide you with clear, actionable insights on how to secure your investments with gold and silver, and of course, why you should as well. Now, when it comes to finances, we're all well aware that it's very confusing and many clients are very unsure about how to proceed with their life savings. It's a big deal, right? That's why we're doing these webinars, to help provide you with some much needed clarity when there's so much confusion and uncertainty in the markets. And we want to give you a good sense of why to buy precious metals in these current conditions, right? Now, at any point in time during this webinar, if you want to chat directly with our account executives, we have them on standby. Call the number that's on the screen, which is 866-607-2447, and you can have a much more in-depth, specific conversation with our account executives. They are standing by, ready to help you. Also, please leave your questions that you have in the message board. I have some moderators that are helping as we go forward here. They're going to send me those questions periodically. And if you have a really specific question, keep in mind that one of our moderators might pull you into a side chat just to answer that one-on-one with you. And then anything that you write is helpful for us to know how to tailor these webinars in the future again. So if you have a question, even if you think I'm going to cover it, just leave it in there. It's good for us to see it. What's also important here is this is not financial advice. I don't know your specific situation. I can't give you financial advice, but I can give you a good sense of where things are headed, why we look at gold and silver, why our clients are buying it. And I think you're going to walk away with a very clear understanding. So it's good to have all you. Again, just leave your message as you go forward here. So we'll get into it. In these webinars, I really want to give you an idea of what we're facing in the economy. And again, why our clients are buying precious metals, why they feel confident to take on gold and silver as an investment or a hedge against the economic factors. And this year has been crazy, right? We've seen the stock market climb to new record highs and then begin to build tremendous volatility and uncertainty, which leaves most investors just a little worried about how they're positioned and what the future holds. Is it going to go up forever, or are we going to experience something like 2008, 2009 when we're so overvalued? And those things weigh on us. Now, the Iran war isn't helping anything, and there's plenty of uncertainty in the world and our country right now. Inflation actually is back, right? It's spiking as energy and gas prices go up from the Iran war. Inflation is expected to get much worse. We're hovering right around 4% right now. Previously, it was kind of under control. Now that's going back up. And with that, we have government debt that has just soared past $39 trillion. That number is just insane. So $39 trillion of government debt. How are we ever going to deal with that? And meanwhile, foreign investors and banks are rapidly losing their appetite for U.S. Treasuries, the bond market, government debt, and they're significantly pulling back from the U.S. dollar as a world reserve currency. We've seen this over the course of the last few years, but that's accelerating right now. And the U.S. economy is teetering on the edge of a significant recession. We have jobs reports that are coming out from the Fed. They're showing significant weakness, and consumer debt is putting Americans in a very restrictive hold, and consumer spending is actually beginning to slow down. So those are the beginning signs of recession that would hit the economy and have an impact throughout. Right? Stocks, earnings, businesses, revenue, all of that gets impacted. Now, what we've also seen is that China has dumped over half of their U.S. Treasuries. So that's significant. We have this, kind of proxy war going on with China and the BRICS nations as they're creating a multipolar world, trying to pull people away from the U.S. China is no longer investing into our debt the way that they are, and they're dumping our treasuries on the market, which is weakening the U.S. dollar and the overall U.S. system. Now, gold has just replaced the U.S. dollar as the number one reserve asset for central banks. It's usurping the dollar. The ups and downs of the economy right now, the debt, the dollar, the stock market, this is really the perfect case study why investors are increasingly wanting to remove themselves from traditional paper assets like stocks, bonds, equities, and the dollar, and rather hold on to something real and tangible that's outside of that system, like precious metals. So again, we have two choices. We leave our investments exposed to dollar-based assets, which are stocks and bonds and everything that's directly tied to the devaluation of the dollar, or we can own something real and tangible that's outside of that system that gives us a real hedge, that no matter what goes on with governments, with money printing, we have something that we own that's going up in value against that and providing a correct hedge. But what's driving all of this, really, all this concern, it's all about the devaluation of the dollar. The dollar just had the worst year in 52 years last year. It lost over 11% in 2025 alone. And so what we see happening is government debt grows, and it grows out of control. Foreign and domestic investors, their confidence in the dollar and U.S. Treasuries is beginning to disappear. So the U.S. holds these treasury auctions where they're selling our debt, trying to raise money to do their spending. The U.S. Treasury auctions are hitting new lows right now. The interest just isn't there to buy our debt, and that's a scary place to be. Ray Dalio, who's the founder of the largest hedge fund in the world, said, if you think it's bad now, wait until we can't find anyone to buy our debt. And that seems to be what we're fast approaching. Now, from Wall Street, there are very credible warnings about a debt doom loop. Now, what that is, as interest wanes and spending grows, we have to issue more and more treasuries at higher and higher rates to entice investors to buy those treasuries. But those higher interest rates on already skyrocketing debt increases the debt burden further to the U.S. It makes the treasuries more and more risky, which then again decreases investors' appetite further. And that then requires us to issue even greater interest rates, again, to entice investors to come in and take that risk. And that just compounds our debt until everything falls apart. And so we have Ray Dalio, again, ringing his alarm bell. Jamie Dimon, of all people, the CEO of JP Morgan Chase, one of the most respected men on Wall Street. And then you have former secretaries of Treasuries coming out that are saying that we're going to experience this unavoidable cliff that we fall off of into this debt doom loop where the dollar is all but gone. And when we have these very prominent people from Wall Street issuing these warnings, that's something that we ought to pay attention to. So I don't know about you. I hope that's landing, but that's what keeps me up at night thinking about where is this all going to go? What's going to be left of the dollar as we continue down this path? Now, on top of that, we throw in the Trump administration wanting to add $7 trillion to our national debt with the military spending budget, right? So think about that. We're already speeding towards a cliff. We've already hit $39 trillion of government debt. Each year, we're running about a $2 trillion deficit, which means we're spending more than we're taking in, right? And guess what? This year with the Iran war already, we've spent $1.4 trillion. So we're on track for perhaps a $4 trillion deficit year, which means that our debt is growing astronomically. It's really out of our control at this point in time. And so along with that loss of confidence, we're losing the world reserve currency status. Congress hasn't protected the prestige of the US dollar, and the world has taken notice. The dollar is kind of all but lost. And in fact, for the first time in 30 years, again, the dollar is no longer the world reserve asset in central bank reserves. Gold actually is. And Brazil and China struck a deal just last month to begin trading outside of the US. So the entire world up until this point for the last 50, 60, 70 years has been trading in the US dollar for anything that they're going back and forth between. But now Brazil and China have struck a deal where they're trading outside of the US dollar. And it's big enough that Marco Rubio had to come out and he said, we need to prepare for a world in which the dollar is no longer the dominant reserve asset we've known it to be. And in 5 years, we're no longer going to hold the world reserve currency status. That's huge. And what's interesting is the Trump administration's whole MO right now is to devalue and weaken the dollar against other currencies. It's something called the Mar-a-Lago Accord. They want to convert America into a manufacturing and a producing nation that can export. It's a very crucial thing for us to be able to do. But in order to do that and be competitive, we have to have a weaker dollar. And so the dollar hit a 4-year low back in early March. And when asked about it, President Trump said, that's terrific. That's exactly what we're going for. We need more of that. And so the whole idea is to weaken the dollar, but stimulate and grow the economy. And so theoretically, we all get richer as the economy grows, even though the dollar is losing its purchasing power. But what I want to just pause and have you ask yourself is your salary going to go up with that? And if not, then we better be protecting and preserving the dollars that we have, right? So this isn't just a one-for-one. We stimulate the economy, everybody's making more money. No, certain companies will, but does that directly translate to your situation or my situation? And if not, then the dollars that we're holding on to are weakening in this process. And that's a huge issue that we're all facing as we watch our dollar's purchasing power go down. Now, the war with Iran right now, so oil and gas prices, again, are spiking. That's causing rolling recessions across the globe. And while we're slightly insulated in the U.S. because we do drill a lot of our own oil, we're a little better than other countries, but we still see that inflation is going to go back up. And so rising oil prices are going to cause all sectors to experience higher costs and higher prices. And that causes an economic slowdown. And so we're further weakening our dollar and losing purchasing power. And the risk isn't just to government debt default. The risk is then being felt here at home in very real ways as we watch prices soar and our dollar's purchasing power plummet. And so that's one of the biggest drivers of why people are coming over to American Hartford to invest into physical, tangible assets that are going to preserve and protect their purchasing power. Because as the dollar goes down, gold goes up in value, and so does silver. So you actually have a way to get out of that failing system into something that's going to protect and preserve. Now, Kevin Warsh, he's a very prominent financier, and he's a former member of the Federal Reserve Board. And he says, if we can actually get inflation back down to 2%, which is the Fed's target, it would actually represent an 80% decline in the purchasing power of the US dollar over the lifespan of the average American. So what that actually means is over your lifetime, you will see the dollar lose 80% of its purchasing power. What the dollar could buy when you're born versus what it can buy as you're nearing your final years, 80% of that is lost. So what are you going to do against that? And are you going to be in investments that are actually going to protect and preserve against that devaluation? And so I don't know about you, but that doesn't feel like a recipe that's going to get us to a good place. It feels like disaster. And when I think about my savings, just sitting there in dollars, earning maybe 3 or 4% in a good CD, a good return, a good yield, sometimes less than 1%, and knowing that those dollars are becoming worth less and less and less, I wonder why I even have a savings account at all. Wouldn't my savings, those dollars I've worked so hard for, be better put to use in an asset that's meant to actually protect and preserve, and that grew by a 60% and 140% last year? And again, I'm talking about gold. Just last year, gold went up 60%. The dollar lost 11%. So if you're in precious metals, you're winning. If you're in a CD or a bond that's giving you 4%, you're losing. You're losing 7%, 6%. If you're in silver, you were up 142% last year. So again, you're winning. And that's what we have to look at. If we were lucky, stocks were up maybe 10, 15, 20% if you were very well positioned. So that's why our clients are buying gold again, and why you should too if this is resonating with you. It's a no-brainer. When a currency is devaluing, wise investors buy gold and silver. In fact, that's why the banks are doing it. That's what the analysts and the institutions are doing. 96% of central banks have been adding to their gold reserves for 6 years now. That's a record number of central banks, and they're buying record amounts of gold. Now, Goldman Sachs, a prominent investment bank, I'm sure you've heard of them, they're saying gold is their number one conviction investment, and that the average American investor should have about 30 to 35% of their net worth hedged into gold. That's huge. These banks have no reason to push people into physical assets. They want you in stocks and bonds and CDs and investments that they can manage. They don't manage gold, but they're saying it's their number one conviction play, and that the average investor should have 30 to 35% of their net worth hedged in gold. That's dramatic. Now, Jamie Dimon, the CEO of JP Morgan Chase, says, I don't often tell my clients this, but it's one of those times that you need gold. And see gold go to $7,000 or $10,000 an ounce? Yeah, that's going to happen. Secretary of Treasury Scott Bessent came out at the start of the Trump administration. He said, gold is my number one holding in my portfolio. I think that every American should have it. It's going to do incredibly well moving forward. And then Ray Dalio again is saying that Americans should have a greater than average exposure to gold right now. Again, warning about that currency crisis that we're walking into. So these are significant statements. These are things that we should pay attention to. And there's a reason that all this is happening. Again, it's our job to pay attention when the banks and governments are buying gold, when the brightest minds in finance are saying to buy gold, when they're preparing for a post-dollar world, then we need to do what the banks are doing and buy gold. Now, it's very interesting in all of this. If you're watching me right now, you probably don't own enough gold and silver, right? That's why you're here. And you're obviously interested in buying more. You're on the sidelines in some way watching all of this go on, maybe wondering if now is actually a good time to buy. But you know what? That's okay. It's okay that you're watching now, that you maybe are sidelined a little bit. What we're experiencing is potentially the longest and the largest bull run in American history for gold and silver. And while we've seen some tremendous moves in precious metals so far, we're just getting started with where they're headed. So you're certainly not early, but you're not late at all. In fact, I would say that you're right on time. See, currency debasement cycles, which is what we're in right now, they last an average about 8.5 years, and we're not even halfway through this one yet. That means we have plenty of runway for gold and silver to keep growing. And furthermore, in any healthy bull run, you always want to see markets take 2 steps forward, a step back, a period of consolidation before they move back up. Well, we just saw gold again grow by 60% last year and silver by 142%. But then with the Iran war, they corrected. So what we've seen is this 2026 has gotten off to a great start. That momentum has stuck around. We did see a pullback and a correction, which is giving you an incredibly good time to get into precious metals right now while they're corrected, while they're consolidating and getting ready to go back up, because they were essentially going straight up. But now they've been allowed to breathe, and we're consolidating in a good range before their next leg up. So your timing and intuition actually couldn't be more spot on. And that's why I'm so glad that you're joining us here today to learn about it. And hopefully at the end of this, you actually take action to get yourself protected. And so I'll talk about that process, but really quick, I just want you to know where we're expected to go with gold and silver. And then again, I'm going to explain how you can actually take action on this and invest into precious metals. And I'll talk about your questions that you have as well. So Wells Fargo sees gold at about $8,000 an ounce by next year. They're seeing roughly a 40% upside again this year from where we're at today. Now, JP Morgan says that there's a path to $8,500 an ounce on gold by 2027. And, we're going to be significantly higher at the decade's end, even $10,000 an ounce. Other banks are seeing $6,000 to $7,000 an ounce at the end of 2026. That's the general consensus. Louis Navalier is calling for about $10,000 an ounce for a bull run super cycle by 2030. So again, across the board, everyone that we're seeing, all these analysts, all these investment banks saying gold at the end of 2026, anywhere between 6 to 8,000. By the end of 2030, gold should be at $10,000 an ounce. Now, that's not even taking into account the accelerated spending that we're doing. So that can push gold and silver dramatically higher. There's no ceiling on where gold and silver can reach to because there's no floor to the dollar. The further the dollar drops, the higher gold and silver go. Now, Bank of America is also saying that silver would end the year somewhere around $309 an ounce. They've laid out that map of how to get there. And Citigroup is saying at a minimum of about $150 an ounce on silver. So that's about double from where we're at today. Now, again, gold started last year or ended last year at about 60% up. Silver was up about 140%. And if you were lucky in the stock market, that was up maybe 18%. Again, if you were really well positioned. And so precious metals are far outperforming traditional investments, and they're offering substantial safety at the same time. Now, when you look at the stock market, and this is kind of my last point here before we move on to the hows of getting into gold and silver. The S&P 500 is the most overvalued it's been in American history by every single measure that economists look at. The average stock is trading 535% greater than its book value. In 1929, that was 400%. We're more overvalued today than during the Great Depression. Now, the Buffett indicator, which is the total U.S. stock market price versus the GDP of the country, we're at 220%. Anything above 120% is in the danger zone. Look at how overvalued we are. And so there's lots of risks. Stocks are at an all-time high. Gold and silver are basically at all-time highs. And you have to just ask what's more risky. The higher the stock market goes, it seems the more risk it's building in. Gold and silver seem to be building a very sturdy foundation at these levels. So again, when we're dealing with the largest bubble in American history, where do you want to have your money? And here's the thing. The Iran war is causing higher inflation and uncertainty across the board. Markets hate uncertainty. And if households are forced to spend more on fuel and necessities, they cut back elsewhere. If businesses face higher input costs and financing costs because rates are up at the same time, then hiring and capital spending weaken, which means the economy takes a hit. If Europe and Asia slow because they're far more exposed to imported energy, and that feeds back into U.S. exports and multinational earnings. In other words, if the U.S. avoids a direct supply shock with the oil prices going up, it can still import an economic slowdown through trade and earnings and financial conditions. And so we're, again, on the edge of a great recession, and any loss in earnings can have catastrophic impact to stock prices and asset prices when we're in this kind of a bubble. And it's worth noting that recessions are actually gold's best friend, right? In markets, it's a worst nightmare. With gold and silver, recessions are their best friend. Gold and silver always see their biggest bull runs in times of recession and inflation. When there's concerns, when there's worries, that's what you're sharing with me right now. That's when we need to own gold and silver. And so just ask yourself, how do you feel about the current state of the market, the current economy, the dollar? And if you are concerned, this would be a good time to get a hedge. In our opinion, looking at the economic landscape, this is hands down the most important time ever to own precious metals. And again, as long as we're devaluing the dollar, gold will keep going up against that and silver will follow. And so we'll talk about how to do that. But first, I want to get to your questions so we can cover some of that. And again, I just want to remind you, you can call us now at 866-607-2447, and we can discuss all of this in more detail with you and really get into your personal situation and what's right for you. Get to the heart of what you're concerned about. We do have our account executives on standby waiting to help, and so feel free to call us directly right now and just get right into it and actually take action on this. Now, Lawrence says oil and precious metals have seemingly become inversely correlated. What's going on there? They would seemingly travel together up or down. Yeah, they're both, kind of that physical market. But what we see, Lawrence, is that any kind of immediate shock to the economy can cause a decoupling. Again, gold and silver and the stock market tend to be inversely related. But what we've seen over the last 2 years is they're going up together, right? So that doesn't make any sense other than the fact that people are just trying to figure out this situation. And oil going up is not some natural phenomenon. It's a supply shock. It's issues from the Iran war. And what we see is that puts everybody into a situation where major institutions are selling positions of physical paper, gold and silver, whatever they have that's most liquid, to cover the risk that they've taken on. So when the stock market drops, margin calls come into play, and banks will liquidate paper, gold, and silver because that's what they have it for. It's their hedge, it's their safety net, and they dip into it. So gold and silver can go down immediately in those environments. Is what we've seen cause this correction while oil's going up. But eventually you would see some evening out of that. So a lot of this is just unknowns with the Iran war. It's creating havoc everywhere. Jeff says, question on liquidity, having personal possession versus a 401k or IRA. So you're just as liquid having gold and silver in a retirement account as you are on hand. If you have it on hand, take it to a local dealer if you need to, or sell it back to us. We'll always be here to buy back your gold and silver. We have a two-way marketplace, and I'll touch on that. But it's very liquid. You just let us know that you want to send it back. We'll send FedEx to your home with packing material and a shipping label. You send it to us. We wire funds into your account. If you have gold and silver sitting in your retirement account, we'll buy it back right on the spot and get funds put into your account so you can take a distribution. Christine says, on a fixed income and need to put away something more than my life insurance policy for my children. So that's a great question to get into with our account executives, Christine. Just tell them what you have maybe off the side that you're looking to protect. But if you have any savings, you just have to weigh where is the dollar going to go versus where are gold and silver going to go, and where would you rather have your life savings that you want to pass on to your kids? It's a great question. Bob says, I have a SEP IRA. Can I invest inside this vehicle? And is there a minimum? Yes, absolutely, Bob. So again, I'll talk on the IRA process here in just a minute, but any retirement accounts you have, old 401ks, IRAs, SEPs, simple IRAs, you can put that into a self-directed SEP IRA, which allows you to hold on to physical assets. Our team will help you do that. It's very simple. As for minimums, it's different on the cash side versus the IRA side. IRA, you have to at least be rolling over $10,000. It's pretty doable for most people. Obviously, most people have more concern than that as well. On the cash side, just $5,000. Anything above that, we can help you out with. Frank says, what percent should we have in silver? Frank, that's, again, a great question for our account executives because it's different for every client. We really want to get to know what's important to you, what you're trying to accomplish with your portfolio, and we'll talk you through that. But tend to lean on gold for preservation and silver for growth. And so if you're more growth-oriented, you're going to go heavier on silver right now. Dorothy says, you would say gold and silver is a hedge, not an investment. Does an investment pay dividends, et cetera? So the metals are more of a hedge, right? Well, you can have investments that are hedges. A hedge just means you have something that's giving you protection against your other investments. So if stocks and the dollar are going down and your normal investments that you're really comfortable and familiar with are going down, you want something that's going to go up and protect and preserve. So gold and silver act as a hedge in these economic times. You can look at gold and silver as an investment as well. Obviously, they're doing incredibly well. They're far outperforming every other investment. Gold's up 60% last year. Silver's up 140%. Again, stocks did maybe 18%. CDs were doing 4%. Where are you going to go? This is a great investment to be in with precious metals. How much of a percentage of our funds should we put into metals? Again, I heard it should be about 10%. In a normal environment, advisors would typically tell you 10 or 15% of your portfolio into gold and silver is a decent hedge. This is not a normal environment. Again, if you know the dollar is losing 11% last year, looking to continue to devalue, if the stock market is risking a 30, 40, 60% drawback like in 08, 09, and some of the economists are warning us about, how much do you want to leave exposed to that system versus putting into precious metals that can actually protect and preserve and go up greater than any other investment you have right now? For me, it's a no-brainer to have a lot more of my net worth in the precious metals than 10%. Might not be right for everybody. So everybody's situation is different. How can you roll over a retirement account into gold without being taxed? So great question, Belinda. I'll just get into the process and I'm going to answer that as I go, but I think this is a good jumping off point to keep moving here. So we'll talk about the how, okay? When you buy gold, you can look at it again for both immediacy and long-term, and I want to make that distinction for you. For long-term, gold, again, is a store of value. It's a hedge against inflation or the devaluation of the dollar. It'll maintain your purchasing power over time and is meant to safeguard gains against erosion of value. So think of gold and silver as protection and a hedge, kind of like wealth insurance for what you've worked your whole life to build up. Now, if you're worried about where the dollar is going to be in 2 years or 5 years or 10 years, then it's a must to own physical gold and silver, okay? So long-term, gold will protect against where the dollar's headed. Now, on the other side, there's the immediacy of the situation with precious metals. We're in a bull market. Gold and silver, again, are outperforming every other traditional financial investment. You have to ask yourself, why is that? If you're in stocks, you're not doing better than gold and silver. If you're in bonds, you're not doing better than gold and silver. If you're in CDs, you're not doing better than gold and silver. So all of these traditional investments that we get so led to put our money into by advisors and just the marketing that we see out there, they're not outperforming precious metals. And so you look at gold and silver as the immediacy as well. They're doing incredibly well. We're very early. And you have to think about, if we have all this risk on the traditional side, especially because of the dollar, and we have all this upside potential on gold and silver, again, 7,000 or 8,000 at the end of the year with this, $150 an ounce with this at the end of the year, where would we rather have our money? And so there's two ways that we help our clients at American Hartford. There's a cash investment and there's retirement accounts. And I'll give you a rundown of each. So cash is simple. Anything that you have in the bank, that you have in bonds or CDs that are not inside of a qualified retirement account, we consider that a cash investment. So you would just do a wire transfer or a check over to American Hartford Gold. Call us up. Again, call the number 866-607-2447. Our account executives will build out a 7-digit client ID and get you payment instructions that you would take to the bank. You do a wire transfer or a personal check or cashier's check over to American Hartford. When we get the funds in, we do a full consultation with you. We help you select the metals that you want, build out a portfolio. We ship that gold and silver right to your door. It's fully insured. We cover the shipping cost and there's no sales tax. It's very straightforward. You own that gold and silver. You can do anything you want with it. But when the time comes that you want to sell it, you can always come back to us. We do have a buyback commitment to our clients. We buy back with 0 fees on that side. Just call us up. Machi, I want to sell my gold and silver. We'll send FedEx to your home with packing material and a shipping label. You box it up, send it back over to us. We'll wire funds into your account. It's incredibly simple. Now, for those of you that don't feel comfortable having gold and silver at home, maybe you don't want all this just sitting out in your closet or in a safe, that's fine. We can open up private depositories and personal storage for you at a very well-established private depository. It's fully insured, backed by Lloyd's of London up to $1 billion, and you can have your gold and silver stored there. So you have options. You don't have to take it home, but we find that most of our clients do want to have gold and silver on hand. And again, a wire transfer, if you're not familiar with that, just take the instructions of the bank. They'll do it. It's very simple and straightforward. If you want to send us a check, we can send you a FedEx shipping label. You print it out, bring it to FedEx. They'll overnight the check to us. We cover that, and then you have tracking on it. It gets here with a day. So it's very easy on the cash side. That's good for most clients. Now, on the IRA side, the majority of our clients have most of their net worth tied up in retirement accounts or old 401ks or employer plans, right? So that might be you. You're thinking, I've worked my entire life to build up this nest egg. It's all exposed to the market. It's in these retirement accounts. How can I get it protected? Well, the good news is you can put physical, tangible gold and silver into a retirement account. So whether you have an old 401k or employer plan, so you worked at a company, they built out an employer-sponsored plan for you, and you left that company, or you're still with that company, but you're over 59 and a half, you can take your retirement and we can help you put it into precious metals. If you have an old IRA, whether it's a Roth, a traditional, a SEP, you can move that into precious metals as well. So what we do is we open up what's called a self-directed IRA. Now, just a quick aside, if that doesn't quite make sense to you, you're wondering, do I have an account that's eligible? Just call us. We'll talk to you about that and dig into the account and make sure that you can roll it. And it is tax-free and penalty-free to move that. But we open up what's called a self-directed IRA. So it's a quick application, takes 5 minutes. We send it over to you for a signature. We just do it on the phone with you. We're going to do all the heavy lifting. When we have that application back, we have an entire back office dedicated to helping you roll your funds over. So we'll call over to your current custodian, help you liquidate whatever positions that you want to move into precious metals. We'll get the transfer form submitted. We'll roll those funds over to the new self-directed IRA. Once we get that account set up and funded, again, we'll go through a full consultation. We'll get to know what's important to you. We'll build out a portfolio based on those things. You'll own physical, tangible gold and silver, but now we ship that again to a private depository. So this is a third-party vault that's outside of the banking system. You own that gold and silver. You can access it anytime you like. It just has to be stored for you safely and securely while it's in that retirement structure so that it does remain tax-free. At any point in time, if you want the gold or silver sent to your home, you can pull them out as a distribution. They'll be mailed right to you. You actually own it. It's physically sitting there just like this is sitting on the table now. It's just not in your hands until you take a distribution. So I hope that makes sense. It's about $250 a year to have your metals stored. That's it. Doesn't matter how much you have. That's the amount that it costs. It's a one-time flat fee per year. It's very straightforward. Now, we as a company will cover your account setup and the first year of storage for you to help you get the account set up free. So you don't have to worry about anything. If you're concerned about what we're talking about, where the economy's headed, you want to get protection, we're going to make it as easy as possible for you to get that. So again, call us, 866-607-2447. Now, really quick, I just want to touch on why American Hartford Gold. We're the largest precious metals dealer in the U.S. Okay, we've shipped over $4 billion worth of precious metals around the country. We've been in business for over a decade. I'd encourage you all to visit our About Us page. There's a welcome video there. You can see our president, our CEO. You can see our sales team inside of our office, our shipping department. You really get a sense of the company that you're partnering with. You can see all of our accolades and reviews for years and years. Inc. 5000 magazine, which is one of the most prestigious investment magazines in the world, has listed American Hartford Gold as the #1 gold company, right? We just have all these accolades and reviews. There's thousands of positive reviews online. We have an entire full service team dedicated to making this a very smooth and easy transition for you both into precious metals and out of precious metals. Everything that we do here is meant to make this simple and easy and straightforward. And again, A+ rating with the Better Business Bureau, Consumer Affairs, Trustpilot, Google, thousands of positive reviews. We've helped hundreds of thousands of clients protect their net worths just like you're here to do today. Now, we do have some promotions for your first investment. Anything over $50,000, we have promotions that come with that. It's free silver. We can offer you a safe to your home. If you don't meet that $50,000 mark, that's okay. We maybe have other promotions that we can bring to your attention as well. But either way, we're going to get you very well taken care of. And again, on the cash side, the minimum is just $5,000. So anything from $5,000 to $50 million, we can help you with. And anything on the retirement side from $10,000 up, we can help you with. Everybody's situation is different. What's important is that you have something that you want to get protected. We're going to help you out with that. It's very straightforward. And you're with the right company. If you're making a move into precious metals, you want to go with the name brand in gold and silver. There's a couple of good companies out there. That's great. But if you're doing this with something that's important to you, you're buying precious metals, you want to come to the name brand in gold and silver. And by far and wide, that is American Hartford Gold. So I hope that gives you a good sense. I'm going to just look and see if anybody had any other questions. And then we're going to kind of wrap this up. But again, don't leave without calling that number that's in the message board. Get on with one of our account executives. You've made it this far. It'd be a huge shame if you didn't actually take a step to get educated and make a move. We all get busy. Life carries us in different directions. You have very good intention by being here today or watching this right now. Actually take the next step, because we don't want to talk to you in 6 months from now when gold and silver are dramatically higher and you still haven't protected it, and maybe there's more turmoil in the economy. Vicky says, what happens if the metals are lost in the mail? So Vicky, it's fully insured. When we ship it, we have insurance on it. That's our liability to get it to your door, and you sign for it upon delivery, and then you own it. There's no liability to you whatsoever. Again, everything that we do is meant to make this simple and safe and easy for you. Okay. Christopher says, I'm sorry, but I got on the webinar pretty late. Will there be a save? Yeah, we're going to get you a replay of this, Chris. So appreciate you being here. Hopefully you've still learned something. We'll get you a replay of all of it. But again, maybe just take the next step and call the number in the message board and talk to one of our account executives, and they'll give you all the information I'm giving you as well. And then Belinda says, would the private depository cost ever increase? So we've seen it increase. I've been here for about 7 years. I've seen it increase twice, and each time that it's increased, it was $20. So very, very moderate. We don't expect any dramatic changes to that. About $250 per year to ensure that your retirement savings are actually secure and not exposed to the whim and, kind of changing volatility of the entire market out there. So I think it's pretty reasonable, and we don't see that being any dramatic changes. Is it too late to invest into gold and silver? So again, the last thing I would tell you on that, we see gold and silver going dramatically higher. That's not just me, Machi Block, saying that gold's going to go high. Believe me, we're looking at the largest ships on the horizon. All of the major investment banks, all the analysts, all the economists looking at the market, looking at the dollar, and saying that the conditions are better than they've been in decades, if not ever before, for gold and silver to grow. So if you've missed out on some of the gains in gold and silver, don't feel like you're too late. You may not be early, but no way are you late. The outlook for gold and silver dramatically higher than where we're at today. And if you're concerned, now is a good time to get in before there's a real calamity disaster in the stock market, where the dollar really starts going into that doom loop, right? Again, so there's never been a more important time to own gold and silver than right now. And I would rather personally sell you gold and silver now, as opposed to when silver is over $100 an ounce and gold's over $6,000 an ounce. There's still going to be a good buy at that time. But if you're concerned with what we're talking about and you want to make a move, there has never been a better time for you than right now. Maybe 10 years ago, sure. The second best time to plant a tree is today. Go plant a tree, get it in the ground, get started, get your money protected into precious metals. So get in now while your instincts are kicking in and urging you to take a next step. Gold is the safest money in these environments. Don't just look at gold as a volatile investment that goes up and down. Look at it as an effective diversifier. Right now, the majority of Americans have most of their net worth just sitting in dollars or the stock market or maybe bonds or CDs. That's all dollar-based. There's no diversification there, really. And again, the bond market is crashing in a way that we haven't seen before. So gold is an effective diversifier out of that system. And you just have to ask yourself a simple test is, how much of a percent of your overall portfolio would be wise to have secured somewhere else outside of the dollar? And just keep that percentage in gold and silver. Build it, set it off the side, and let that be your diversifier. You can look at it that way. You can look at it as an investment. You can look at it as a hedge. There's lots of different ways to skin the cat, but just get something into precious metals. Gold goes up in times of trouble, and it stays consistent in prosperous times. It's safety. The most important thing is that you have a well-diversified portfolio, so think strategically about this. This is a potentially once or twice in a lifetime event that we're witnessing right now, and you have the opportunity to participate in it, both in making and preserving money at the most critical time for U.S. investors. Again, CNBC says gold at $7,000 an ounce at the end of the year. Deutsche Bank, $6,000 an ounce. JP Morgan Chase, $8,500 an ounce gold at the end of 2026. Gold is the hedge against economic and geopolitical risks that can't be diversified any other way. And I'll leave you with a few thoughts aside from the immediate concerns of the war and how that might trigger a recession or a stock market crash. The U.S. is seeing a significant slowdown in jobs growth. That slowing growth is weakening unemployment. And we see that the Fed is arguing to cut rates and stimulate that economy, to print more money. And that printing of money will increase inflation even further. That'll devalue the dollar further. That'll drive up government debt even higher. It decreases foreign confidence in U.S. bonds, treasuries, and the dollar overall. And it's going to drive up the price of gold and silver significantly. That's why these projections are on the table. The dollar is losing credibility as the nominal anchor of the global monetary system because the Fed is losing credibility. The U.S. Congress is losing its credibility. It's time for you and I to own gold and silver and follow the smart money. Get out ahead of this mess and don't just sit in a devaluing currency or stocks that have exposure to that currency, investments that are 100% exposed to that devaluation. And then furthermore, geopolitical tensions, they're not fading into the background. We're now entering a world where there's a strong demand for countries to secure critical metals in this decade. Not just on the individual level for you and I to buy gold and silver, but entire governments and countries are buying gold and silver and using it as a stockpile. There's a reason for that. This is the best time in history to buy gold and silver. Timothy Moe, he's in Goldman Sachs. He sees political and geopolitical risks that are nearing an inflection point for markets, potentially tipping stocks into correction territory. And when you have such a large bubble in stocks, if that bubble bursts, there goes everything everyone has worked so hard to build up. Again, gold is outside of that system, and it provides real stability away from Wall Street. And then keep in mind that following a record-breaking 2025, gold and silver have entered into 2026 with that momentum intact. Geopolitical tensions, falling real interest rates, and efforts for investors and central banks to diversify away from the dollar reinforce gold's role as the ultimate safe haven. And wise investing is just risk management. Gold is far outperforming the markets, and there seems to be nothing but risk and uncertainty on the horizon. Dollar is plummeting. The U.S. is moving into recession. Countries are moving out of bonds and U.S. treasuries and into gold. Follow the countries and the banks. There's a reason that all major financial institutions are leaning on precious metals in this season. Central banks, billionaires in history are telling you that gold is the place to be right now. The bond market, equity markets, currency markets, they're far too volatile for our retirements. And so there's one place that we look, and that's precious metals. That's gold, that's silver. And so as we wrap up this webinar, again, I just want to thank you for joining me. It's always a pleasure to be able to do these. I hope it's been insightful and educational, but don't you dare leave and get off this video without calling the number. If you're convicted, if you're concerned, take the step, get on with our account executives and actually get some protection in your portfolio, because we all know how life goes. You're going to be looking at this a year from now, kicking yourself, wishing you had gotten into gold and silver when you could have, before some big disaster hit, before gold and silver went through the roof again. So call the number 866-607-2447. Let us help you out. I'm Machi Block with American Hartford Gold. It's a pleasure to work with you. We're looking forward to helping you out. Thank you for being with us, and we'll talk to you very soon. Call the number 866-607-2447.